Good day to one and all. This is Dr. Subramani here. I just gave the pre-BoE data release trade calls between 10:10 and 10:40 GMT. Now we are around 10:40 GMT, 11:40 GMT, and BoE interest rate decision was announced. There was an unchanged condition, and as a result, the market is making sideways move. And let us see what happened to that our forecast and also the results. Then let me explain to you what is expected to happen in the market. If we look into the live market code page, you find that Euro, GBP and USD they are all still showing negative net change. Not much of a progress either on the upside or on the downside. And you find that USD CHF is showing 1 pip negative net change, a small dip. And in the case of Canadian dollar and Australian dollar, they are just showing a nominal net change. So it indicates that not much of move has happened in the market, and the players are making small upward and the downward move in the market again to make a firm move. Now, if we look into the forecast, they are expected to make the swing and slide, and after that of the BoE interest rate decision, even though it is unchanged, they are expected to slowly firm up towards close. So by 13 GMT, the European session will get over. By the time they will slowly gain the levels in the case of GBP by making either way moves. And also they will gain the levels in the case of Euro. Then we'll come across sudden drop in the case of USDN that will act as a trigger for Euro and GBP to gain. Later on during the year session, USDN is also expected to slowly gain the level. This is what envisaged. Now coming to the trade calls I was explaining to you, the case of Euro, they did not make much of a dip, and 1.1216 they are not filled it. But in the case of GBP, they came down and now currently lower than that of the buy level 1.3223. And I was telling you below that of the low you can buy. At that time they came down to 1.3202, and if you could have taken a buy around that 1.3210 or 20, then you can keep the hedge order at 1.3180, and the current low is 1.3188, and they are just slowly firming up after making a small dip, and they are expected to gain the levels. And in the case of Australian dollar, 74.53 was the initial, 74.53 was the buy recommended level, and they came down to 74.59, but still they are not come down. So in the event if they come down a little bit, we can take a buy, and then later on during the session they are expected to gain the level. And in the case of yen, so we are waiting for it to come below that of 101.94. That will act as a real market trigger for Euro and GBP to gain up. So they are now making a downward stop and a small gain in the case of GBP. Later on they will do it in the case of Euro, and finally they will make a drop in the case of USD-yen. So they are handling the currencies one by one. As a result, you will come across their respective crosses are being handled, and that is the main reason that they are handling one currency at a given time, holding the rest of the currencies. Thereby, they will be able to bring in the changes in the crosses. So if you watch carefully, after that of 12 GMT, they will slowly gain during that of the late European session. Late European session is from 11:30 to 13 GMT. By 11:30 GMT, they came down and formed 1.3188, and then they started gaining the level, and they are expected to gain and reach closer to that of the high they are shown After that of the BoE interest rate decision, 1.3145, and after that they are expected to slowly gain the level. So dips are buy opportunities in the case of Euro and GBP. Drop is a buy opportunity in the case of USD in order to make quick profit during that of the dips or moves in the market. As I explained on Tuesday, that this week the market is expected to show the mid-month trend reversal moves. So they are expected to make either way moves in the market. And one such either way move we have already seen in the case of USD they came down to 101.24 and then went up again to 103.23 and then started coming down. So in the case of yen, they made the either way swings from 101 to 103 and come down, and they are expected to breach the 101.94 again, and then later on gain the level above that of 103. This sort of wide range swings, they do it as they wanted to handle the majors as well as the crosses in order to position themselves. So in order to accumulate more positions, what they're doing is in the list market, list volume condition, they just make the wide range swings for a prolonged period. So they buy low and rise and book profit. Again, drop the market to buy low and book profit after gaining the level. So this way, when they do it, they are able to accumulate profit, and that particular profit they add it to that of the further higher level buys, so that the higher level buys will be of a lesser value when compared to the other then market levels. As a result, they will be able to easily gain it, because this they do it when they are uncertain about the market, and also when they find that suddenly when the traders desert the market, they will be left alone. So in order to avoid it, they accumulate enough profit and then later on going for one-sided buy after the gain. And that way you will be able to see that the market levels will be high, but they will be able to liquidate all their buy positions at a higher level with a profit, even though they buy it at a higher level to gain the levels in the market. And for that, they do this prolonged consolidation. So don't be frustrated or don't become impatient just because they do a prolonged consolidation. That means it is a preparation before that of the big move which is going to happen in the market. So keep in mind that the players are here to trap the traders and earn their money. So the traders are bound to get trapped, because once they develop the bullish feel after the gain and buy, then their players are expected to make a slide and hit their stops. So always keep in mind that dips are buy opportunities in the market, but still use the hedge order to limit the risk so that you'll be able to easily handle the position in the event if there is a big move happening in the market. If they hit your hedge and go up, you can close your hedge with a nominal loss and keep another hedge order to limit the risk. Thereby, when the market goes up, you'll be able to really book maximum profit in your buy positions. And they might create a lot of bearish information, and they say that the market is favoring US dollar, etc. But the players are accumulating the buy positions. When the players accumulate the buy position, which is become a bit of which is very important for them to exit out of the positions. After accumulating buy positions, they have to gain the levels and exit out of the position. They cannot simply take delivery of the positions, because these are all leverage trades. So in such a situation, they are expected to gain the levels and book profit with regard to the buy positions. So wait for such quick moves to happen in the market and then enter into the market. We'll be able to really make quick profit. If there are any questions, you can ask me. I'll be willing to answer to this question. If there is any question, kindly ask the question in the question answer window. I'll be willing to answer to those questions. Just because GBP they made a small firm up and the small dip, don't develop the bearish feel and the players, it is unchanged data, so they are just making the swings in the market to create the sentiments, and the players are buying here around 1.31 and 88 to 1.32 level, and then slowly during from 12 GMT they will start gaining the level. So they are waiting for the volumes to come in the market so that they will be able to make some good moves in the market. Is there any question? Kindly ask me. Okay. Okay. How should we trade GBP crosses? Okay. As far as GBP crosses are concerned, see, GBP is a European currency and it trades with it of euro as euro GBP cross. It trades with it of CHF as GBP CHF cross. So in euro CHF, euro GBP, it is a denominator. It is a denominator in euro GBP, and it is a numerator in euro CHF. It is a numerator in euro CHF. Sorry, GBP CHF. Yes, GBP CHF. It is a numerator. So you have to look for the move in the case of GBP. When GBP comes down, when it is in the numerator side, automatically the currency, the cross will come down. When it is in the denominator side, euro GBP, when GBP comes down more, euro is holding, then you will come across the gain. So this way you have to understand whether GBP is in the numerator side or in the denominator side. So if it is on the denominator side, when GBP comes down, then this euro GBP cross will go up. Euro CHF, in GBP CHF, when GBP is in the numerator and CHF is in the denominator, then when GBP comes down, then automatically, because the value of numerator comes down, this level also comes down. So this you watch carefully and accordingly take position. Now GBP, they are expected to gain the level, so you can take buy position in the case of euro CHF and GBP CHF, and take sell position in the case of euro GBP during this brief upward stop, and we'll be able to see the profit. Afterwards, keep stop at entry and remove the hedge order. Thereby, you will be able to really make good profit. Now, with regard to the other crosses with yen, GBP yen, for example, you have to similarly see how exactly GBP is making. USD yen is making the move. So both are showing negative net change. So as a result, you will come across the difference between that will be shown in GBP yen, so which has made a nominal negative net change. And they are expected to make a break downward stop to 134 level and start gaining the levels in the case of GBP yen, because they are expected to gain the level both in the case of in the case of GBP as well as USD yen in coming days. Then KB, would you mind explaining why the volume is less in the recent years than it says 2008 and 9 when I entered the market? Okay, see, it is a question of winning situation. So you know that in 1995 to 1998, there is an euphoric condition, and a lot of people enter into the market because the online trading was introduced. Earlier, the people have to go in for the trading using the bank terminal. They have to call the bank and find out what is the level, and they have to subscribe to Bloomberg to know the levels in the current market condition. So they used to charge heavily for the feed provision. So that was the situation. People were anxious to know what is happening in the market, and they were not being freely given the feed like what you see as live market put page. a delayed feed will be given. Then when it is, in order to attract more people to enter into the market, what they have done, they started giving the feed, and also the analysis were charged. So there are various websites which were giving the forex market analysis for a premium, and they used to charge on a monthly basis or a trade basis, etc. Then you find that people started subscribing to such analysis, thinking that if they subscribe to the analysis and then trading in the uh, online trading platform, they'll be able to make money. So initially, when the market was so volatile, and also when they found that the platform providers were very, very lenient, they were able to really make more money. And in the process, the quick moves, it used to happen when a data release happened. The market used to show about 300 to 500 pips net change, and that time when they are on the right track, they were able to make huge profit in the market, and that attracted more and more of the traders. And finally, you find that the online trading platform providers were regulated by the respective agency, nodal agency. As a result, you find then the daily swings are being regulated. They cannot make indefinite rise or drop in the market, and they have to necessarily do it with 100 to 200 pips and things like that. And that was the initial stage. People were really speculating more and investing it. And later on, when 2007, 8, when the market was in a euphoric condition, a lot of traders have taken the higher level buys in the case of Euro and GBP, thinking that they can reach the sky. And 2008, by November, during the US election time, they simply dropped the market in a very big way, and they said bye-bye to Bush. But the currency market dropped in a big way, and till February 2009. And afterwards, many people have lost the money. And that kind of volume we don't come across now again in the market, because after losing the money, the traders have become abundantly cautious. So they are doing cautious trade in the market, and they trade with a stop. And earlier, people used to take huge positions and keep very tight stop and see that if the market moves in their favor, they make big profit. But in the online trading platform, when it has become prevalent, you come across very frequent stoppers happening in the market in order to make money. Then people find it extremely difficult, even though they follow the technicals and fundamentals, etc. They found that whether they do a buy and sell trade or a sell and buy trade, their stops are being hit. And that volume came down drastically in 2011, 12, and then finally a situation came in wherein the analysis were given free of cost in order to ask the traders to come to that of the forex trading. And now you come across that still the volume is not picking up in the market. So what is your view on the commodity currencies? The commodity currencies, namely the USD CAD and Australian dollar and also New Zealand dollar, they're expected to show the USD weakening more slowly. And you come across that GBP is also gaining now, and Euro is also gaining. So after making a brief downward stop and creating the feel to the traders, the currencies might be weak, and they started again gaining the levels. So this is the way they can only act cunningly against the traders, give the market sentiment, and induce the traders to take the position and act against them. Day in and day out, the players are doing it desperately, and they are doing wide range swings in order to attract more traders to come in and get habituated. Okay, when GBP goes to 1.33 sell, when it comes to 1.31 buy, 0 buy, that sort of habituation that they want the traders to develop, and thinking that they can make big money, and later on they are expected to make a quick upward breakout and then go to 1.35 and 36, And people might think that it is after the elections, etc. They might do it, but before that, their players are expected to gain the levels. So keep in mind, you do come across the gaining moves to happen in the case of Euro and GBP as well as USD and USD CHF, and trade carefully with the hedge, and so that we'll be able to earn during either way moves of the market. Is there any other questions so that I'll wind up the so no more question coming out. So we are able to understand that other players have just taken the market since the BoE interest rate decision was unchanged. They just made a small gain in GBP and then made the drop, hit the stops below that of the earlier low 1.3202, came down to 1.3188, started gaining the level. So once they make a brief downward stop, and you can understand they wanted to gain the level. So that is how you have to identify and always take the position in the case of majors during the early and the late sessions, so that you will be able to see quick profit. Then what do you think about the Euro New Zealand dollar? Euro New Zealand dollar is expected to slowly gain the level. Okay, it is expected to slowly gain the level, and then later on, when Euro gains more, when New Zealand dollar lag behind, it will slide. So initially, it will gain level nominally. Okay, so it is already time up. So let me take that opportunity to thank FX Street for the facilities provided to present the spike trade calls. And I'll come back tomorrow during the Asian session live market analysis and give you the review of the forecast given it for this week. So wish you all happy trading. See you tomorrow.